down 1.5%, as they say. There are going to be many more chapters to this story. But in focus today is the pharma pack, and we've already touched upon a whole host of news items related to individual companies in the pharma space. So I'm very pleased to welcome Sarabjit Kour Nangra, Vice President Research at Angel Broking, to really walk us through each of these in detail. Sarabjit, good afternoon. Thanks very much for joining us on NDTV. And I'm going to get to potentially the most interesting one. Now, these are reports not independently verified by NDTV Profit. I'm sure you've read them. The fact that Aurobindo Pharma has bid for Teva's UK, business. How do you see that? I know we're in the realm of we're not sure yet exactly what's going on, but what do you make of it were it to happen? Aurobindo bidding for Teva's UK business?
See, I'm not, as an analyst from a geographic point of view, I'm not very gung-ho about especially the UK and the European businesses normally, because there the profitability in comparison to US and other geographies is pretty lower actually. I don't know about this Teva's UK business in detail in terms of profitability and other aspects. But I guess acquisition is something which Aurobindo has taken upon itself to expand in areas apart from US. So coming from Aurobindo's standpoint of view, they want to be a global pharma company, and they have good ANDA pipeline in the US with more than 400 ANDAs filed, and so it's one of the largest in terms of ANDA filing. So in other geographies, it's looking at acquisition. It's done a couple of them last year also, last and 1.5 years. So I guess that's a strategy which is pretty vocal. Aurobindo has been vocal, so I wouldn't be surprised, but yeah, obviously it depends on the valuation they end up paying, because these, I don't think in a generic way that or any European or UK business will be that profitable.
Okay, so you're not fired up by the idea, though you see where Aurobindo Pharma is really coming from. Let's just take a step back and look at it a little more from Aurobindo Pharma's perspective. From their perspective, there's a compelling reason, do you think, to be in geographies beyond the US and sort of replicate what they've done in the US?
Yeah, see, it makes sense for any company which is going global to have a diversified presence across geographies. As you know that ultimately generics rules growth in most of the economies in comparison to the branded business, and the reasons are well known and well documented by now. So I guess Aurobindo's ambition is to be one of the global generic leaders. So from that standpoint of view, they would be looking at assets besides US also, and probably in rest of the world also. And that's the case for most of the company. Even Lupin is looking in Japan and other geographies. Sun Pharma is trying to figure out in rest of the geography. So it's a diversification plan, because none of the companies want to be dependent solely on US for their growth. So from that standpoint, growth is definitely given in most of the generic geographies, especially rest of the world and Europe, and to some extent US also. But it's profitability profile which will depend, but then depends on the acquisition also. So probably I need to, I have not seen in detail the product portfolio of Teva's UK business, but on a generic basis, UK and European generic business is very competitive, and the margins are pretty lower in comparison to US. So from profitability perspective, it might add to the top line definitely, but profitability wise, I don't think it will add significantly.
Okay. Now I'm going to change gears and ask you about Dr. Reddy's Laboratories. Context on the fact that Merck has lost a district court case for the Nuvaring patent, and in real terms, can we interpret that as positive news for Dr. Reddy's, or too early to call it yet?
I think, see, these issues, unless the company launches, we don't discount it, because these cases, they tend to have their own litigation, which until company launches, you get a confirmation that finally that they are able to, get a go-ahead in terms of launching the product. So these are the nitty-gritties of product launches associated with litigation. So I guess that is the case with this one also. So I will not be factoring in so far. As far as Dr. Reddy per se is concerned, I guess in terms of numbers and in terms of growth, the stock is already factoring in most of the positives. So until something comes in which is extraordinary, unknown to the numbers, probably I don't think something happening in that stock very fast actually.
Okay. Are you following the news flow on Claris Life Sciences on the Vasna plant? What do you make of that?
I'm so sorry, I don't track Claris actually.
Okay.
So I have no comments to offer there.
Okay. How are you sort of approaching the pharma space now? Are you sort of dividing it up between, those that have a solid growth path going forward, but also valuations have risen, and then another category where there could be a turnaround in the making? I'm putting words into your mouth. How are you viewing the pharma space? How are you dicing and slicing it right now?
See, it's been long that pharma used to be a very secular story when Cadila, Lupin, these were mid caps, Now, over the last, say, I think 10 years gone by, the base of these companies have grown up, market share and majority, especially US and all, have significantly improved for most of these companies. And so have the risk associated with these businesses. Like US FDA is an event which virtually happens on a monthly basis, Most of the companies, you will hear a news flow which is associated with US FDA. So it's no long, it's still a secular growth story, but there are hiccups involved. So what happens is that when the going is good, like over the last 1.5 years, the pharma is facing hiccups in terms of US FDA events, domestic pricing event happening. So because of which the growth has been muted, margins have been in some cases lower than expected. So many events have played out which has, played with its growth overall. So now this industry is moving in a phase wherein, it's safe to play on the valuation rather than just growth, because growth tends to be, 2 years, once the US FDA approvals come in, the growth will be stupendous for next 2 years and then subdued. Okay. But nonetheless, stocks also react similarly. They move up significantly once the approvals are in place, product approvals. So it gives you a valuation go over the fair zone. So those are the times wherein you can come out of the stock sector. And when such events happen, the valuations are ridiculously cheap.
Yeah.
So you can get in. So these are the strategy we adopt for the sector.
Okay. I'm just going to take a detour for a moment, because over the last 2 minutes or so, we've been flashing the Indian Oil Corporation results, and my colleague Pankaj Poddar now is going to take us through the implications of what we are seeing as far as IOC is concerned in the first quarter. Pankaj?
Well, Manvi, very good set of numbers, clearly no doubt about it. But, I'm still awaiting the presentation to come in. That would probably give us a clear picture as to, what's happening on the various other matrices that one needs to track. Initial reaction is on the positive side. Results are way ahead of estimates in terms of profits as well as in terms of EBITDA. But you must not forget that, there will be a one-off in terms of inventory gains that they have. So, that number is still awaited. However, we have the GRMs, $9.98 a barrel. Now, this includes that one-off gains that I'm talking about. Now, that number was expected to be around the $6 to $7 barrel mark. So, there could be a very big inventory gain actually, because of which these numbers are looking very, very good. It was a similar case with the BPCL as well, with HPCL as well, and probably now with IOC also. We are still awaiting the details of that, but as of now, GRMs looking very solid, EBIT looking very solid. Sales numbers are also pretty good. Now, sales numbers have come in at 1,700,000 crores. It was expected to be around the 95,000 crore mark. So it just gives you a sense that, maybe there is, some sort of volume which is much better than what was expected. So that should always be taken in positively for a company like IOC. However, I'm still awaiting one particular detail, that is, what is the sort of number that they are looking at in terms of the inventory gain that they have. That is something which will probably drive what's happening going ahead. Overall, these numbers are not looking particularly that bad. Gaurang Shah of Geojit is now with us. Gaurang, first reaction, good set of numbers from IOC, but priced in?
Well, that definitely looks like, Pankaj, because all your three oil marketing companies had given robust performance because of, thanks to, like you were rightly mentioning, the inventory gains. That's point number one. Point number two, refining margins for IOC, especially, Pankaj, has come in for the highest level over the last 3 quarters. Last quarter, last fiscal, was somewhere close to about $3 or $4 if I'm not mistaken, and it has come in at $9 plus. So this is quite encouraging and heartening. Our sense is that the crude oil prices in the international market are going to be in a range $40-45 on the lower side, $50-55 on the higher side. And in this kind of a scenario, if your rupee does not do too much of weakness against the dollar, then I think we are safely landed. As a disclosure, we do have positive coverage on all the three oil marketing companies.
Right. As far as inventory gain is concerned, we are still awaiting that number. But, that's a number which one should ignore, or now it will be a part and parcel of these companies like IOC, BPCL?
I think it will be a part of it because, inventory gains are definitely going to look, and of course, the crude oil fluctuation does not happen to a great extent. And of course, on the flip side, you will also have to keep one eye on the rupee-dollar equation. But given the free pricing regime, petrol, diesel, given the limitation in terms of subsidy for the LPG and a slab fixed for the kerosene, I don't think you are going to see any disappointment on the earnings front. Only problem is, and that clarity also come through, dividend payouts are being given out by these oil marketing companies to the government of India because they are the largest shareholder. But now we hear, as of now today, I don't know how far it is true, Pankaj, that they are going to cap the dividend and utilize the cash on the balance sheet for the growth of the company and reward the shareholders accordingly over longer term. So my sense is that there should not be any negativity overall, yes.
Right, but overall, your first reaction, what would you now wait for after we have the basic details?
Well, immediately, like I said, Pankaj, we have a long-term buy call. Now, I hope, and I would not be surprised to hear some bonus announcement from IOC as well because BPCL did 1:1.
Right.
HPCL announced.
Gaurang, already a bonus announcement has come in a ratio of 1:1. I was talking about the numbers, the matrix, what would you look for? So one data that we are looking for is the volume number, and the second is for, the inventory gains or losses. So just what you would watch out for when the management talks or they give out these details.
Definitely inventory gains and losses because that's the number that is going to impact to a great extent.
Right. Apart from that, in terms of management commentary, anything?
Well, I hope they expand and reliability and volatility of crude oil prices, how they are going to manage. Are there any talks between the government and the exploration companies as far as dependency on imports are concerned? Yes, we have a bilateral trade with Iran, that's good. But does that secure us to a great extent, both in terms of volatility of commodity prices, rupee-dollar equation, as well as in terms of the petrol prices on the domestic front, Pankaj. So I think broadly improving the network, increasing capacities, refining, etc. That would be the commentary that I would be listening into.
Right. Gaurang, thank you so much for taking us through the initial reaction of IOC numbers. The stock, meanwhile, is actually into the red. Numbers, as always, for these oil marketing companies, slightly confusing, but we are still awaiting for the presentation and some more details.
Pankaj, thanks very much. That was Indian Oil Corporation and its scorecard in the first quarter. As we wrap up the show, I very quickly want to just look at DLF and how that stock is doing, because that's another set of earnings that the street is awaiting, and the expectation is a slowdown in sales in micro markets except in Gurgaon, and the sales number the street is looking at is 2,261 crore rupees and a PAT number of 132 crore rupees. It's a wrap on the show, but the last hour of trade today is going to be an interesting one, so do catch the 2:30 factor with Pankaj Poddar. It's coming up shortly.